Nigeria's economy expanded 1.9% year-on-year, that's in the first quarter of 2018, easing from an upward 2.1% growth in the previous period. It is the fourth consecutive quarter of expansion as the oil sector continues to rise, while the non-oil sector slowed down. The oil sector grew 14.7% year-on-year in the first quarter of 2018, and from the 11.2% expansion in the prior period. The country produced 2 million barrels of crude, that's per day, up from 1.75 million barrels per day in the same period a year earlier. Now, as a result, the oil sector accounted for 9.6% of the GDP compared to 8.5% last year. Higher oil prices, improved liquidity, and increased public spending in the run-up to the 2019 elections may also improve growth this year. But political uncertainty as well as security concerns continue to pose risk to economic activities. Economic analysts expect GDP to increase 2.4% this year, with the hope that next year growth will rise to 2.9%. Well, to put this very topic into perspective, I have with me in the studio the head of research, Nigerian Economic Summit Group, NESG, Dr. Olusegun Omishakin. Thank you very much, Doctor, for joining us today.
Thank you for having
me. And happy in the Kabir. Yes, let's start that way. Well, look at these beautiful figures. Lots of projections. IMF at the time came with figures. A lot of agencies, even the NESG, have also had some projections. What do you think about the growth? Many say it's still shaky.
Yeah, actually, you can't grow beyond your history. You must understand the fact that the economy was badly affected because of the fall in the oil price. And over time, the Nigerian economy has been trying to come out of that situation, even though the movement is still very slow, especially the first quarter. We have, as you said, 1.95% growth. And if I'm not precluding what the boss of MBS said or recent with respect to the Q2, the picture might not be too good with respect to GDP. He was trying to say maybe on the average we may have something like 2% or even 1.6 or 7, that we might not have a strong growth. And this is well understood. One of the reasons is because we still have the crisis in the northern side of the country. We have problem with the agriculture product. As a matter of fact, the agri sector seems to be affected. The contribution of agriculture seems to be affected. And indeed, the contribution of the whole non-oil sector seems to be growing by 0.7%, less than 1%. That is not good compared to 14.7% of oil sector. So these are clean picture of what is happening externally and what is happening internally. What is happening externally is still what we are leveraging on. The oil price is increasing, around $71 per barrel now. We are able to produce more. There is stability in the Niger Delta, and then we are leveraging on that factor. But internally, we still have the crisis in different places. But again, let's give it to the government. Different interventions from monetary and fiscal sides have been able to stabilize the economy. But let's see what happens going forward, especially during this period of election.
Exactly. We've been seeing some half-year results, even from companies coming to the stock exchange to, and a lot of positives are coming from some of these companies, and really hoping that, and even talking about government FG bonds, which has been coming up lately. Many are always oversubscribed. We talk about the FG bond, National Savings Bond, and the Green Bond. Does it mean that the confidence is back to Nigeria?
Well, when we say confidence, it depends on the investor. You have the portfolio investment and the foreign direct investment. With respect to the long-term impact, I would say no. Long-term in the sense that if you believe in the system, in the Nigerian economy, you put your money down, you invest your money in the real sector. You invest your money for a long-term process, and that will be driven mostly by the structure of the economy, the infrastructure, how attractive your economy is. But if you think on the momentary, in the short run, you are likely going to benefit from investment in the short time. Then you come with your portfolio investment. As a matter of fact, portfolio investment and other types of investment contributes to around 95% of our total capital importation in Nigeria. FDI contribute 5%. That does not show any sign of the fact that investors are having confidence in our economy. But whether portfolio or foreign direct investment is investment. So I think we are seeing, though compared to the last quarter, there is a decline, but it sees something that is encouraged, something that is still good.
That's still good, yeah. Right? Now, Doctor, let's take a breather now. We'll return with more on the show. Stay with us. The discussion continues in just a minute. Glad to have you back. Well, we're still discussing economic issues as we celebrate the Eid al-Kabir on the other side. And Dr. Omishakin is here with me. He's the head research of Nigerian Economic Summit Group. Now, talking inflation. Now, inflation rate dropped further to 11.14% in July this year from 11.23% recorded in June. That's on month-on-month basis. The headline index increased by 1.13% in July, up by 0.11 percentage points from 1.24% recorded in June. This is the first time month-on-month headline inflation was declined since February this year. Inflation has been down for more than 1 year, more than 12 months now.
Yeah.
I'm clearly sure of that. Yeah. What do you think? Some say there might be a rebound as we move to an election season. Let's start with what you think about the figures we have and what you think as we move to an election season with regards to inflation.
Sure. We've been having this fall over time in the rate. You remember the MPC holds the interest rate at 14. That has a strong implication on what happens. It's like you are forcing the system to be there.
So you mean you would prefer them to drop that rate?
No, I'm only telling you what they are doing.
Would you like that? You don't have any opinion on that?
Well, it depends on
pressure.
It depends on which side you have. But objectively, I think there may be a need now because they've been doing this for a very long time, and you don't just stay holding it like that. There must be a need for them to review that stance. But I think the position they've been holding so far shows that they can see kind of put the pressure down. That's one side. But why I think over time there may be a need to review is because the fundamentals of inflation, the food inflation, is still not smiling. So keep inflation, keep the MPC rate at 14% for life. If the fundamentals are not strong, you are still going to have a big problem. So I think the conflict we are having now has already eroded the contribution of agri sector to the GDP, and that is already showing. One of the documentaries you've shown now declared that the tomatoes and other foodstuffs, even the ram that they are selling, it's the same thing. So these are clear case of inflation. But compared to where we were coming from, I think it's still better. But I think there is more to be done with those data, 11.1%, and what the reality is showing. Because
clearly it shows that the purchasing power of consumers is still on the low side.
Yes, it would be. For instance, yes, you can say that, even though we want to see, say, the aggregate demand seems to be what is driving the growth. People are kind of buying, consuming more compared to where we were in some quarters ago. But still, the power they have now is already being eroded by this consistent inflation rate. But if the inflation rate is coming down, then you are approaching again the election period. That might not be the situation. Inflation might jump up.
Uncertainties, investors sitting on the fence, and a lot of developments there. Well, no, reports from the central bank also shows that the nation's external reserves dropped by 1.4% in July. The reserves, which stood at $47.7 billion as at June ending, dropped by 1.4% to $47.1 billion on July the 31st. Now, the reserves further depreciated by $184 million from 47.3 Well, it's contrary to the Monetary Policy Committee's prediction of an increase in the level of reserves. Experts say continuous decline in reserves is due to government's action in supporting the exchange rate. But Nigeria's external reserve as at the 15th of August stands at $46.46 billion.
Yeah.
These reserves, many have commended government, quote unquote, talking about what we used to have before now and what we have now. That's been really commendable, and thanks to crude oil price. So tell us, what else is responsible for this?
I don't know. To me, I think there is a simple linear relationship between crude oil price and external reserve. There is no, I don't see any kudos. Why don't we have this
maybe
kind
proper
of
management?
Yeah, of course, those things will always be given, except in some abnormal situations of government, maybe in the past, that just squander the system. But a reasonable government, you cannot amass more than you are earning. It's simple. So it's still based on the fact that the oil sector stability is there, and then the oil price seems to be favorable, at least for a while, and then we are able to get more. Beyond that, I don't see how the volume or the share of the external reserve is. I mean, you don't necessarily need to have get your foreign earning from the sale of crude oil. So that is a big question. If all that constitutes your external reserve is coming from the sale of crude oil, there is no big work there. You are just selling it and you are preserving them. That's all.
The funds.
Yeah,
but this is supposed to, one, build more confidence for investors.
Yes.
That is what I think that reserve, that's part of what it does.
Yes,
because when they know that, it's a little bit, they can be sure of repatriating the funds.
Yes, my point is not to say it doesn't have any implication. Yes, it does. But I'm looking beyond that.
How far have we now harnessed the non-oil sector?
Because if we are going back to the same oil scenario in such a way that it looks not favorable, you see say now that our external reserve has crashed. So what has happened?
Monopolistic. So we're talking about looking inwards here now, talking about non-oil sector to get more proceeds. I know the NEPC has been doing a lot. We'll be talking more about non-oil too very soon, because we are talking, we want to really know how far they've gone in promoting non-oil exports. It's very important that we fully diversify our economy. Well, let's round up now in a bid to maintain Forex liquidity, allowing investors to trade their own dollars at more market-determined rate. CBN of Nigeria, the central bank, has created different windows for various segments of the economy. Now, foreign currencies are traded in these markets at different rates, leading to a multiple exchange rate system. The Apex Bank recently injected a sum of $210 million into the interbank foreign exchange market. This is to make Forex available to meet customers' requests in various market segments, that's of the central. But the CBN currently operates multiple rates, and this continues to raise transparency issues and impact on investors' confidence. The wide gap between the CBN official rate of 305 and that of 360 and above continues to create issues. Before we came on set, we talked about this disparity. We are having a little bit of stability, well, thanks to the central bank defending the naira. But when are we going to eliminate this difference that comes from the parallel market and the interbank rates? Will this ever happen?
I don't want to sound negative. Let's hope it will happen. We may not be able to totally eradicate the gap or the premium, but the way it looks now, it's not just because the gap is there between the official and the non-officials, because there are many. I think the problem for investors now is because we have multiple rates. You can always have, say, the black market, the parallel market is 360, and then everybody, you have it, but you have multiple rates. So it becomes so difficult for you, the rate at which you are going to business. Your business model is not linear, it's non-linear. You will be getting or sourcing from different. So when you source your dollar from one market that has different rate, and you are faced with uncertainty. I think to me that is the main issue. Not whether the gap is high or low, but the issue is that the central bank should be able to try and reduce the multiple rates that we have. It's abnormal. It's not reasonable for you to see a place you want to go and invest and you are asking yourself, which rate are we using among all these rates?
Exactly.
Wide rates.
Or you come in with this rate and you have to go
and
out
you
with
go
this
now with
rate.
another rate. You have to bargain with. So I think that is a major problem, and that's why you have these foreign portfolio investors coming in and going out, and that is not healthy for our economy.
Before I let you go, let's touch a bit on the Economic Summit for 2018. We were there with you actively in 2017 as media partners. We also intend to continue that this year. TVC should be there full-time, bringing everybody live to speed with happenings in Abuja. Now, tell us, what are we expecting? Poverty to prosperity, role of governance and institutions.
Yeah.
Why are we looking at this
Yeah,
at this
you know,
time?
NESG has been at the forefront of trying to put the government the center of development, to say you cannot develop without taking the government, holding them to, responsible for their actions. And you've been having for some time recession. We talked about it. We talked about how to grow. We talked about growth and recovery, ALGP and the rest. So I think now the discussion should be looking at the streets, looking at the massive unemployment and poverty that we have, and then asking ourselves, how do we transit from this situation to the situation of prosperity, economic development, and sustainability? From A to B, the critical role of governance and institution cannot be removed. And to me, that is the main problem. So we have to talk about strengthening different institutions of government, strengthening how government's fiscal policy or monetary policy works. Yeah. You have to look at issues of inclusive growth and very broad issues. And we hope we'll be able to get more from both the private and the public sector this time around.
Oh, that is really great. Dr. Omishakin, I must thank you very much for spending your time with us today, at least your afternoon, for the Eid al-Kabir celebration. And maybe from here, we're going to get somewhere to get our own share of the meat. Because we've been seeing this meat and we need to get some into
Maybe I'll get from you.
Thank you so much, Doctor. Thank you for your time.